evening, everyone. This is Joe Henches with Beyond the Chart, and this is technical analysis review of the stock market for today. Today is Tuesday, June 24th, 2014, and hopefully I can drown out or eliminate the background rain and thunderstorm that we're getting here in the Dallas area. So I should be able to do that, and hopefully you won't hear that. So, all right, the Dow was down 119 points today. And we're going to take a look at the market as we usually do, and then we're going to look at four stocks. We're going to look at Apple, Apache, Caterpillar, and Cree. Okay, the Dow was down 119 points. Now we're pulling back into this ending diagonal, so I've still kept this ending diagonal triangle in here. It still looks like a valid formation to me. We had this throw over that we've had, and actually this wave 5 in here, this could be this little ABC 3 wave of the wave 5. It went slightly higher here, 978, than it did here, 970. We had a 3 wave type pattern in here. We had a larger 3 wave type pattern. We had the 3 waves down here. We had the 3 waves in here. So it fits the pattern of 3 waves. Now, the other thing that's interesting is, if you remember, we talked about this last week for several times. I talked about this. I said when we pulled down in here, I said there's a real good possibility that we could get a rally back, kind of like this, and get an M top. And that seems to be what we're doing. We're getting this M top like this, okay? And, if that's the case, we could be heading down, but we need to break this right in here in terms of the low. Now, we need to watch. Again, it's like, and I know I sound a little bit like a broken record, but you do need follow through to prove this out. I mean, you got to continue to have, we've closed below the 10 exponential moving average just like we did here, but we didn't get any further follow through. We didn't even break the low of that day, and we just came back up and pulled back up. Now, if we start to break down, like in here, it does not, as back in January, as everyone remembers, it does not take very long for the market to take it from you or for the market to collapse. So we need to be on our watch. I'm a little bit nervous about a couple call trade idea positions that we've got. Actually, I'm in 3 of them. They're all Chinese stocks, which is kind of interesting. And one of the puts I had, which was very frustrating, that to have puts and the market's going down, and then the Cena stock turns around. I could talk about that, but it went up, so we got stopped out of that. And matter of fact, I need to update that on the Trade Ideas webpage, so I will update that situation there. And we didn't get into another one, just while I'm thinking about it, on Cree, which I'll talk about here in a minute. We got into another trade idea. Been working for a couple of days, and it hit the entry point today. All right, let's look at S&P 500. Similar type thing. Remember, I talked about on the weekend, I talked about the divergence that we were seeing. Well, the divergence seems to be playing out, and especially that we're getting this double divergence here on DI minus and DI plus, that it looks like it's starting to roll over, or at least that's the idea it's starting to give. Now, it's got a lot more work to do to become negative. I mean, the moving averages are still above each other in here. They're still aligned. But we'll just have to see. Do we start to get something like we did back in January? All right, let's see. The next one is NASDAQ. We'll take a look at the NASDAQ. Now, this did go today on an intraday basis. Everybody was probably really, really excited. We're moving up here, going into high, and all of a sudden it reverses. So we had kind of a nice reversal bar in here. I mean, from picture standpoint, higher high, lower low, and you totally reverse and close down for the day. And literally we've closed below the close of the last 4 days. So pretty strong little reversal bar. And again, we're going to have to watch to see what kind of follow through we get in here. Next one is New York Composite. Same type thing, the divergence that we were seeing on the weekend, and now we're getting this close back below the 10 and coming back down into this ending diagonal. we're stretched out into the apex here a lot more than it shows even on the Dow or the Standard & Poor's 500. So Russell 2000, this could end up being a right shoulder after all. We'll just have to see. Again, the divergences are showing up. We're getting the close back down here. We're just going to have to keep watching. It's just, this whole Iraq thing spooking everybody. I don't know what happened to oil today, but I know that the Iraq thing was starting to spook the market quite a bit. Short-term trading index, we had a negative, pretty high reading up in here. So here we go again with the 10-day exponential moving average pulling back up. So it's kind of interesting. It's like the markets with some of these indicator readings. And I know I've seen some people I've seen some articles on the put to call ratios and, how they're getting low and getting, it's like the market, it's almost like it's playing with us a little bit, and it'll get to where it's an extreme, but it's not quite there, but it doesn't matter. So we'll just, it's going to be interesting to watch to see what develops with this scenario here on the short-term trading index and the VIX. This does seem to be playing out. This divergence. Now we thought we were getting a divergence over in here with this low, and then that didn't work. Well, we got it right in here, and we thought we were getting it, and then it broke, and so it failed. Now we rallied, came back down, and it did not go to a new low, and while the VIX did, and so we got our little divergence scenario, and here we are rallying on the VIX. That's a sign to me that there's that something's building. We got the blue crossing the red line here. So we'll see how that plays out. The high low, drop back down naturally as you would expect it to do, but again, we're kind of just hanging in the middle here. We're not getting any extreme reading. All right, that's the snapshot on the market for now. So we've had 2 days of trading since the weekend. So we closed last Friday right up here, and now we're down here again. And let me look at this trend line real quick. Yeah, we slightly broke this trend line that is in here. Let's see how it looks on the S&P. Yeah, it's not quite as, S&P is a little sharper. Back on New York. Yeah, it's a better picture on the it's a clearer picture on the Dow. So we kind of closed right at it, maybe slightly below it, depending on how you draw your trend line in here. So it's going to be interesting next couple of days. All right, we're going to dive into the 4 stocks I talked about. We're going to start off with Apple. I know I talked about it on Saturday, but what I'm going to try to do, I've been trying to, over the last couple months, rotate through various sectors, and I've decided what I'm going to try to do is take 4 or 5 stocks a night, so that when I do my market update, I do 4 or 5 stocks, and I'm just going to take them through alphabetical order. I've got about 35 stocks or so that I watch. I'm going to take it through alphabetical order, except on Wednesday, the main Chinese stocks that I'm looking at, I'm going to talk about on Wednesday. And of course, on the weekend, trade ideas can be reviewed and that type of thing on Sunday. So that's the game plan. I'm going to move back to trying to do that, see how that works. So tonight we're going to take the first 4 that I watch, and that's Apple, Apache, Caterpillar, and Cree. So Apple, I've been talking about a potential pullback into this zone in here, okay? Because I think we've got a third wave in here. 1, 2, 3, 4, 5 up into here. I'm expecting it to pull back. That's why I have this Fibonacci. Of course, it's not showing up. Let me do this. It'll show up now. There we go. So what it's doing is it's measuring from this point to this point, which is the entire 5 waves, 1, 2, 3, 4, 5, okay, of this sequence, of this third wave that we're talking about here. So I'm looking to see, okay, where could it be pulling back? And here's 23.6%, and here's 38%. So I'm expecting it to be in this shallow type range. I'm not expecting a 50% or more. And as a matter of fact, it cannot pull back below this point here, or we don't really have a 5. We don't have we're not in rally mode. I mean, we are, but it's not an upswing anymore. It's like I've got to totally reassess what's going on if this point breaks, because wave 4 cannot overlap wave 1. So anyway, we're a ways away from that. So right now I'm just focused on how far and where is Apple going to pull back. All right, so those are my thoughts on Apple. I do expect it to pull back. It's just a matter of how far will it. And the next one is Apache. And Apache, oh my gosh, this thing has just been on fire. And it just, the trend is all the way up here. The ADX has got like a 54 reading. And RSI is way up here. It come off this, it hit 91. So this is why you do not short just because the RSI gets above 70. All right, and when you start to get extreme readings, that's all the more sign that there's a strong trend in place. Okay, so now this thing has just gone straight up. Let me blow it up. And notice how it just stayed above the 10. And, and I think can't remember where, I think it got in here and I think it got out. I can't remember where it was. It was either here or here, and should have got back in here. Okay, when it didn't close below the 10, I was a little skeptical, and so really my idea if it trades below the 10, the moving averages are aligned, and it doesn't close below the 10, then really when it breaks like a 3-day high, a 2 or 3 day high, get in. Okay, so that's what I'm thinking when the moving averages are aligned. And so now we're getting this pullback. So now I'm watching. So what I'd like to see is a pullback. Now this is the neckline of the big head and shoulders. I also think that the more you look at this, is a part of this big head and shoulders. Okay, here's the shoulder. Let me do this with the marker. Okay, here's the shoulder, here's the head, and here's the shoulder. Okay, this is the neckline, and I can't type with this pointer. Okay, this is the neckline. So now a lot of times what will happen is you'll get a pullback to the neckline and then it'll go again. So that's what I'm watching for in here. And the other thing, let me get my mouse back. Yeah, and so I'm kind of expecting this thing to pull back a little bit down into here, and especially since it's gone so far. I'd have to look to see really what's a legitimate way to measure this from a retracement. Really, this is the support area that ought to come in from a retracement standpoint. So this is the area I would expect to see it come back down into. So and from the standpoint of where this thing can go. Now this is, granted, this is over the longer term, but you measure this head. And just from a percentage standpoint, you just literally do it from I always take like a little piece of paper right on the chart, right on my screen, and then add that distance to the top up here. And where do you get? You get right back up here around 130, testing this high. So I expect it to hit back up in this range if it keeps moving. So that's the longer term target. Right now, I'm just looking for it to pull back and to get back on board. So that's Apache. Caterpillar, Cat, I think we talked about not too long ago. I do think we're in a fifth wave up, and I think we may be in the fifth of this fifth wave. So I didn't think it had a whole lot more to go, so I'm kind of cautiously watching this one. Not strong divergence there, a little bit of divergence in here. Actually getting the dual divergence on the directional movement, DI plus and DI minus, and you got the divergence in here on the RSI. So this may be all we get. I mean, Cat may roll over from here and come on down, but again, you got to get it closing below the 10 and starting to pull down for that to happen. And Cree, the last one today is Cree, and this is the one we've been watching, trying to get in, and it finally hit the target down in here, right, very close to 48. And then continue to close down. I'm expecting this to continue to move down to the downside. So we'll just have to watch and see how it plays out. But this looks like a typical reaction type thing, and we got this trend line in here. Now I'd like to see it break this trend line a little stronger and head on down. Okay, so that's the 4 that we're talking about tonight. Tomorrow we'll be back with, we'll take a look at the BRIC countries, Brazil, Russia, India, and China, just to get checkpoints as to what's going on with them and where they're at, especially China. And then we'll take a look at 4 or 5 Chinese stocks. So everyone have a great evening and a great Wednesday. And oh, by the way, share the video, share the post, and with your favorite social media, email it to your friends. This has been Joe for Beyond the Chart. Thanks for stopping by.